equity markets seem to be very sanguine about Greece's deadline, end of Monday deadline to put forward these measures to win this 4-month extension. Are you as sanguine as equity investors seem to be?
Well, yes, good morning and thank you for having me on your show again. Well, to start with, again, Greece and all these drama that we have seen for the past few weeks, it is the same for since 5 years again. I don't think so at some point that the Greek exit will happen. I don't think so. I mean, at some point, but they will come up with a deal. But the point is, I think so that the new prime minister will lose some of its majority, maybe, or if it's or his support, especially that they started to backtrack. We were waiting for whether Germany to backtrack or to retreat on its demands, but unfortunately the Greek asked for an extension. So that's in terms of the stock market again. I'm still buying it, especially in Europe, especially that we have again the cheap money still rolling. And as far as the ECB continue to print money, we'll keep buying them.
Yeah, and do you prefer Europe to the US? We've seen a number of headlines, Nour, in the last week, how hedge funds and legendary investors such as George Soros are moving money from the US to Europe and Asia. Is that something you're doing?
Possibly yes, and I think so that the situation in the U.S. is getting even worse, like by the day. I mean, if you look at the numbers that we've seen for the past few weeks and since exactly the end of QE3, I mean, there's many of the economic and more than 88% of February's numbers came in also totally away from the market expectation. One of the things that I'm looking at also again that the Federal Reserve will not be able to raise rates in any way, and this is what we've seen in the past meeting minutes. The factory orders fell by 5 months in a row. And back in 2012, if you go back to the history, when the factory orders and durable goods, when they went down by 4 months in a row, they sparked QE3. Right now we have even worse numbers and more than 5 months in a row. So basically, I think so that at some point the Federal Reserve will backtrack again and will keep the rates lower for longer. And I'm assuming right now, if even the numbers came in even worse right now, they might start saying about maybe further measures. And don't forget that inflation is still also on the decline. So I would prefer to keep buying Europe for now and just stay away from the U.S. until I see like clearer outlook, especially right now with the Citigroup surprise index is basically at the lowest level or crashed by the most since 2012.
And if the Fed puts back its first rate hike, Nour, does that mean it might be time to start rethinking our US bond strategy? US Treasuries in February are on track for their worst month in 5 years. Is it time then to buy US debt if the Fed puts back its rate hike?
Well, if, again, it is the same, I mean, the same argument is based since 2009, if the Federal Reserve will raise rates and if the bond market will continue the same situation. But again, the situation in the U.S., but I believe that everybody should, rethink about the whole strategy of the U.S. and the whole strategy of the Federal Reserve itself, because continuing with the cheap money for more than 7 years now, and so far, once the QE stops, I mean, just like what we said, like when the music stops, everybody stops dancing. So it might be the same issue all over again. So the bond market could be in a bubble at the same time. If you have a look at the yields in the U.S. or across the globe, I mean, you have negative yields almost everywhere. So I think so at some point everybody should rethink about what's happening, especially in the bonds market. And again, for the yield curve in the U.S., if you look at it, we're almost like 30 basis points away from an inverted yield curve, which means basically that we're talking about and we're entering a recession very soon, which I believe at some point that we will enter that recession. And if you also listen to what Alan Greenspan said over the weekend, that we can't get out of the zero interest rate era without a recession or even a depression worse than what happened in 2007, 2008.
It's a big call, Nour. I mean, you're saying the US will enter a recession again.
Yeah, well, how soon? If you look at what happened again in Q3, in Q4, and even Q1. I mean, Q4, but we ended up with a revision of the estimates were 3.2%. Right now, it's basically the initial number is 2.6, and now the revision is basically below 1.8%. If you divide all of these numbers across the year, it's below the expectation or below the target. That's number one. Number two, again, look at the economic figures. Most of, or 88% since the October meeting, or since the end of QE until today, most of the numbers, more than 70% of the numbers came in far away from the expectation. So again, if you go back to the history, every single QE, when the QE stops, the economy slides back into recession. Again, don't forget, at the US dollar right now is hurting the exports in a very bad way. The trade balance deficit is soared by the most on a record within only 1 month after ending also QE. So at some point, I believe that the Federal Reserve will backtrack. They might they might start even talking about QE4, but not that soon. Maybe at the end of this year. But how soon the market, the economy will go into recession? I believe maybe we need 6 months to see some sort of a confirmation for that. This is possible.